Good evening, Money Magnet. Hope you had a good day today. I know I did. I know a lot of my Discord members did. And we're going to talk about what happened in the stock market, specifically the S&P 500. And let me tell you, not only did we get a new all-time pivot high, which SPY was able to drop up to the 631.54 level, but it gave us a new all-time high close once again, getting us back above the 628 level. In my opinion, today, intraday was a pretty good trading day, at least for day trading. I wrote here in my Discord, if 628 holds as support, 630 and 631.5 stays in play. I wrote that at 9:29 a.m. this morning before the move happened. And you can see this morning, 9:30, it never broke down my 628 level. That's this green line down here. And then at the 9:45 to the 10 o'clock candle, we managed to clear my 630 level and it smashed my 631.5 level. That's all we were able to get in the morning, was one level to level move to the upside. This move alone, depending on how you play it, may have made a few $100, may have made a few $1,000. But either way, it was level to level. We didn't get much more of that, and it spent hours just consolidating. Pretty boring. However, we started forming a structure. Shout out to my Discord member, Oscar, who always says that. Wait for structure. And boy, oh boy, did we form a structure. Because you can see right here that the SPY actually created an M pattern. That's a structure. Now, I was watching the 630 level, but based on the M pattern, 630.5 was definitely a good intraday level to watch as well. And you can see on the 15-minute chart, it broke down 630.5. Now, personally, Unco did not use the 630.5 for a point of entry, but I did write to my Discord members, it's power hour and 630 back testing as support. From here, if it bounced, I wrote trust it if 630.5 clears to put those higher targets in play. And I wrote if it stays below 630.5 and 630 fails, 628 or lower would be in play. So we're just looking to react. And you can see after it broke down 630.5, when I wrote it and it hit the 630 level, this was before it actually closed below. It was hitting it. It never bounced back above the 630.5 level, closed below 630, which was my trigger for puts, and it managed to get to a low of 628.35. Managed to get a little over a $1.50 move, $1.60, $1.70 move. Can't even do math properly, but it didn't hit my 628 level, but it was good enough for a level move. And then that was it. So in my opinion, it was pretty much a pretty simple trading day, especially pivoting off using that 630 pivot level. Cleared it, broke out, looked to long, hit the next target, broke down support, looked for the next target. It was not perfect towards the end of the day, but towards the end of the day, you just take what you can get. But now that brings me to the daily chart. So good intraday trading, but on the daily chart, it's more focused on swing trading. Ever since we recaptured the 5 DMA, remember when Uncle spoke about the 5 daily moving average? I said recaptures of the 5 DMA are usually bullish, and I showed you guys examples from the previous time when we were able to recapture the 5 DMA, and so far that's been the case as well. So are we seeing signs of a top? It's probably what a lot of people are wondering. When are we going to pull back? We just keep on melting up to new all-time highs. Don't even focus on trying to call a top or a bottom. Focus on the right pivot level and the right setup with the right targets. So for me, yes, I do see selling pressure with this wick. Selling pressure after hitting my 1.382 fib level. If there is bearish follow through for tomorrow based on the selling pressure that we were able to get at the end of the day, then 628, 626 needs to fail as support. Those two levels fail. Whoever's been wondering, is a top in or do we have a top? Whoever's been wondering that, the price action will say yes to you if it breaks down those support levels. 628 and 626, keep in mind, it needs to happen with volume. Lots of participants need to be involved, especially big money players. If there's big volume, that's a sign that big money players are participating as well. It needs volume. It also needs strength, momentum. You don't want to see micro pullback. You want to see an elevator down. The old phrase is stairways up, elevator down. So we might get some pullbacks here and there, like this pullback intraday. We broke down 630, dropped down a little bit. That's good for an intraday move, a day trade for puts. But if we're talking about a swing trade for puts based on a daily chart, I need to see both 628 and 626 fail. We lose some fib levels, but also the 5 daily moving average. Now, not every breakdown of the 5 daily moving average has shown follow through, and every time it was recaptured, it showed a lot of bullish momentum. So if we happen to lose the 5 DMA again, you need to see behavior from the price action reflect bearishness. That means breaking down support and turning that same support level into a resistance. It needs to break down the 626 level and turn 626 into a resistance to give us a sign that we're going to get some more downside. So it will look something like the price coming down, break down 626, retest 626 as a resistance, and then push it down forward. It would look something like that. That would be bearish price action behavior. So if you don't trust the initial breakdown of 626, check out the back test. If there's a rejection and it starts pushing down, that's good for a multi-day move to the downside. But if we break down 626 and recapture it, similar to what we did to the 5 DMA, then that's not bearish. That's a bullish entry. Are we on the same page? So one more time, we are bullish above 628, and clearing 630 and 631.5 would send us to new all-time highs. If we break down 628, that would be a bearish warning because we closed above it today. But if we break it down, that could be the start of a false breakout setup, and breaking down 626 and turn it into resistance would make me comfortable swing trading puts. Otherwise, I'm still overall bullish. Here is QQQ, also bullish because it cleared the next fib level at 563. However, it did not clear the top of the doji candle. So tomorrow, bulls need to show some follow through, clear 564.8 to put 566, 568, and 570 in play. If it does that, it clears the doji, and there's no reason to be bearish. Now, we're looking for reasons to be bearish. Breaking down 563 would be a start, because we cleared 563 today, putting QQQ in breakout mode. So if we break back below 563, that would be potential false breakout setup, putting 560 back in play. Below 560, based on a fib level, but it's also based on the low of this doji candle. If price can break below that level, I would favor a multi-day move to the downside. It also breaks back below the 5 daily moving average as well. Here is Tesla. Now, Tesla gapped up, but there was definitely selling pressure intraday, breaking back below my 331.5 fib level. Not quite a dark cloud candle pattern, but we can approach it with the same approach. So the way you would approach it is you look at the low of this red candle, which is at 326.8. So I do have support at 328 and 326.8. If we can break down those levels tomorrow, we should be able to drop back down to 322 and the 320.5 level. Below 320.5, we should go test the bottom of the triangle pattern, which is around the 314 area. Now, if today was just nothing, like it was just a chop day, and tomorrow where the bulls are planning to hit the top of the triangle, then it must get back above 330 and 331.5, because it broke down that fib level today intraday, but it never cleared it on the daily chart. So despite closing below it and breaking it down intraday, it was never an official breakout on the daily chart. That means we never technically cleared it. So bulls have a shot tomorrow still, if they can clear 331.5 and 333, to put the top of the triangle pattern in play, which is around 345. Above 345 would be breakout mode. So let's keep this simple. Look to short below 328 and 326.8, and look to long above 330 and 331.5. Here is NVDA finally pulling back a little bit here, and have just one daily chart close below the 5 daily moving average. You know, we can't quite trust that one daily chart close below the 5 daily moving average. If we're to take this breakdown more serious, I need to see at least 2 or 3 breakdowns or closes below the 5. So if this just a false breakdown setup or a bear trap, tomorrow 172.5 and 174 must clear to send us to new all-time highs. But if we stay below 172.5 and we break down 171 and 169, we are in pullback mode with 165.5 in play first. That's the gap fill, and then after that we'll likely drop down to the 160 area. area to retest my multi-month trend line. Here is coin, pulled back a little bit. They weren't able to hold 419.7 as a support. They broke it down. Based on where it's at right now, it closed around 413.6 ish. It's at 416 ish in the aftermarket. So if we are to pull back tomorrow, I need to see 415, 413, 411.6, and 410 all fail as support to send us back down to 406. And below 406, I would favor a multi-day move to the downside, maybe another $10, $15 move. I will trust no bounce unless 418 and 419.7 can recapture. Technically, we would close above that level last Friday, but today we closed back below 419.7 fib level. So if it recaptures tomorrow, that should send us back to 430 and possibly close to the 440 area. And last but not least, here is IWM. I have to say, it does look pretty bearish to me. Last week, we had a dark cloud cover candle. That's a 2-candle bearish pattern. Closed below 223. They weren't able to recapture 223 today. Showed selling pressure and managed to slightly close below my next fib level at 221.5, which is also around where my fib level, where my 5 DMA is. So tomorrow, for me to be bullish, IWM needs to stay above 221.5 and recapture 223. If that happens, at least on the 15 to 30 minute chart, I will look to long with 225 and 227 in play. But I tell you this, overall bearish below 223. And if we can get below 221.5 and 220, I would look to short with 218 in play first. But I would have some confidence based on the context, because this could be an M pattern playing out on the daily chart, which could be huge. So if we break down 221.5 and 220, there's a good chance we go even lower than 218 and possibly down to 216, or maybe even a $5, $10 lower than that. Either way, let the price action guide you. Thank you so much for watching. This really means a lot. I hope I was able to help you guys make some money today, and I hope I'm able to help you guys make some money tomorrow, because why else are we doing this? This is what money magnets do. We attract money. Bye.